On today's episode of Gathering the Kings.
Life has a starting point and it has a destination.
That's right.
Most people don't realize that. And so if your goal is to drive around in circles, that's fine if that's what you want to do. But I think so many people do that, not realizing that's what they're doing.
You are listening to Gathering the Kings with Chaz Wolfe, featuring fellow 7, 8, and even 9-figure business owners who have real battle scars from business and life, but have prevailed as the king that they are designed to be. We welcome high-performing entrepreneurs to the stage in order to reveal the real of the real on what it takes to build a successful business today. We dissect the good and bad decisions they've made along the way that give a true and accurate picture of the journey of success and how you too can get there. Through this dialogue, you will learn the value of growing your network and surrounding yourself with power players and kings like today's guest. Grab your pen and notebook because we're about to dive in.
Good on my side. Yes, sir.
All right. What's up, everybody? I'm Chaz Wolfe, Gathering the Kings. This week, I've got Charlie Peters on the King stage. What's up, brother? How are you?
Chaz, I'm great, man. How are you today?
I'm doing well. I have loved all of our interaction before this call because you are just like pointed and on it up here about business. I know that today is going to bring a ton of value to the listener. So tell us what kind of business that you're in, brother.
So I am a professional real estate investor. I am the managing partner of a company. We have 4 business models that we run simultaneously. So we buy properties to hang on to. We have buy and hold properties. We buy properties specifically to resell. So we buy to flip. I hate that word, but everybody understands what it means. So we buy to resell. We have a syndication business model. And then I also do some land development. So those are the 4 buckets under the umbrella.
Yeah, I think that they all have some synergy with them as well as can operate separately. So I love that. I've got a question before we really dig into your story. You're obviously doing quite a bit with 4 different business models in one. You've obviously been super successful. Otherwise, we wouldn't have had you or invited you to the show. But my question is, why are you still doing it? At what end is there for you? Like you're still pushing probably as hard as you ever have, and why?
Yeah, there's a book called The Snowball by Alice Schroeder, which it's probably the best biography ever written on Warren Buffett.
Wow. Okay.
Everyone listening should know who Warren Buffett is, so I won't go into detail on that. But my biggest takeaway from that book is that he talks about how the older you get, you want to know that your life makes a difference. And so he's a compounder. Imagine a wet snowball rolling down a hill and it picks up snow as it goes down. It gets bigger and bigger. And so that's the compounding analogy. And that's what I do as well. I'm nowhere nearly as big as Warren Buffett, but yeah, that's what I do as well. And so he's building all this wealth up to give away. And he famously gave most of his money to the Gates Foundation, where you had one of the wealthiest men giving to, I think, the wealthiest men at the time. But again, I'm not playing in that ballpark, but my why in life is to really enrich others. And I'm hoping we can do something similar with regards to being able to build up the business enough so that we can impact the lives of others. I work a lot with local charities here in town, and that's very important to me.
Yeah, that's awesome, man. I appreciate your perspective on others. I think that entrepreneurs alike, many listening today, I'm sure, probably have a similar desire to help others. I think that's what pushes us into wanting to provide a service or product at some point. I'm curious, has that always been a why for you, or has that established or gotten deeper as you've gotten older?
Yeah, Chaz, you're digging in now, man. So I had a son who died when he was 18 years old in a fatal car accident. We have set up a foundation in his name, and my goal will be that his name lives on. And so, yeah, the other part of that is I want to honor my son. Hopefully people will remember his life and legacy. And that's what this looks like now.
Yeah. And so the push and the shove becomes easier, or can you just persist through it knowing that it's for such an important thing like your son's legacy?
No, I'm just kind of wired that way. I enjoy working. So I'm the guy who doesn't like to go on vacation, and I'll wake up at 6 o'clock and go wash the cars and make sure everything's all done whenever we're out and about. Sure. I don't do downtime well. So
You said you're the operating partner. You got to have your hands busy. So you're in the right seat. That's great stuff. Okay. So tell us about the journey. Was entrepreneurship always the thing for you, or did it start with this real estate endeavor? Or tell us kind of how you got started.
No, I have an older brother. He's 12 years older than I am, which that's a massive age gap for siblings, but he's been almost kind of like a second father to me a little bit. He became a real estate broker when I was in high school, and quickly realized that the way to make money in real estate is not by being a broker, but by actually owning investment real estate. And he was my landlord when I was in college. Yeah. And then I worked for him as well, cleaning apartments, painting, picking up trash, mowing grass, all that good stuff. So yeah, I cut my teeth the hard way, man. And
that's right.
But it's funny because my background at all was not geared towards owning real estate. And I fell into it after college, mainly through his influence. He was my first mentor in life as well as in real estate. So awesome. That's how that all came to be. But yeah,
that's cool. I've got a younger brother by 11 years.
Okay.
I didn't know my dad growing up. He didn't know I existed, and I didn't know he was my dad. And so the relationship I have with my brother is probably a little different than yours, but you're right. 11, 12 years. It's a long time. We're completely two different stages of life. Even now, me being in my mid 30s with 4 children and a wife, and him he's in vet school, like single, like just a completely different angle of life. Okay. And when you've been along the journey here, obviously building this real estate business, I want to know, was it all 4 angles, the 4 different business models that you positioned? Was that from the beginning, or did you grow into those over time?
No, not at all. Grew into those over time. As opportunities popped up. Initially, my very first real estate goal, and this is mirrored off my brother, who is very much a buy and hold guy.
Okay.
That's pretty much, he just built up this portfolio of rental properties over time.
Sure.
But yeah, what was your question? Oh, did it fall? Yeah, my original goal was, I thought, man, if I could own 10 quadruplexes, 40 units, I would be set. And that was my very first goal when I bought my first property back in 1996.
There you go.
Yeah.
So the position of having passive income to be able to go do other things in life, or what was it about 40 units for you that was just like, it's the key that unlocks everything for me?
Yeah. So when I graduated from college, I took a job in sales, originally chemical sales, and then transitioned over to medical sales. And I felt like if I could get up to 40 rental properties, I could replace my W-2 income and be able to have this. My brother had this freedom. You go over to his house at 10 o'clock on a Thursday morning, and he's sitting there playing with his kids in his pajamas or whatever. And I wanted that. So that was, you look for a way to build up your passive income so that you can be released from the corporate grind there.
Right. Now, would you say that same level of freedom is what drives you now, or is it more of what you said a minute ago, which is helping others? Yeah.
It's more about building something that's bigger than myself now.
Yeah. Did you have the realization along the way? And I'm gonna tie a couple of things back here for the listener, but along the way of helping obviously with your son's legacy and helping other people and having something bigger than yourself, was that once you already had that freedom and you thought, this is great, but there's got to be more? Was that some sort of a thought that you had, or did it just morph over time? Or
yeah, it definitely morphed over time. That was not the original goal. No, it's funny. You're a fresh graduate coming out of college and you're thinking, gosh, I hope I'm not going to be homeless the rest of my life. And then there's a company out there that actually wants you to come work for them. But you're so grateful to have this job, or I was. And,
Sure.
And that worked out really well. I had it was a great career, but I worked for the medical sales for 9 years and then transitioned over to real estate as I felt like, and the timeline really plays into this as well. 2005 is when I left medical sales, and I'm in Florida. And so the real estate market is booming in 2005. And then fast forward 3 years, and I'm afraid I'm going to go bankrupt because of the financial crisis and everything's starting to fall apart. And there was about a 5-year decline there where things were scary. Yeah. But then we started buying again in probably 2012 or so.
Got it. And so I'm curious to know, through that, you just gave us such a nice setup there for good and bad decisions, but somewhere in there, tell me a good decision that you or inside the business between the partners you guys made that sets you up to be able to still be operating today, maybe through the storm, if you will. What was a good decision?
I had this one deal in 2009, which it popped up. It was 12 quadruplexes here in Tallahassee, popped up for sale. And it was one of those things where they used a commercial broker And he based the value off the cap rate and not the breakup value. But these quadruplexes were on 12 separately deeded parcels.
Oh, wow.
And yeah, it was one of those things. I can't remember the exact numbers, but we paid, it was about $235,000 per quadruplex that was worth probably 365 or so. If the previous owner just would have gone to a residential broker and said, what is one quadruplex worth? He would have gotten a very different answer than how they'd valued it. But it was an out of town sell, and rents were depressed. Property management wasn't all that great. It's all the stuff that people look for. Yeah. So I bought that. We carved it up into pieces and sold it off. And I wound up making about $500,000 on that deal. And that was as things were starting to fall apart. And I did this old school Dave Ramsey debt snowball thing where I started just paying off my smallest debt and then go to the next smallest debt to the next smallest debt. And I wound up paying all this stuff off, and I got my loan to value down, my global loan to value down really low on the whole portfolio. Yeah. And so that allowed me to be able to start buying again. But that was the deal. I was heavy into rentals. I wasn't carrying beach houses and vacant land and all that stuff that kills you during a recession. So we had just affordable working class rental properties, and they did fine. And I would have been fine going through the recession. But you're just scared when you wake up and this equity is just evaporating off your balance sheet as property values are dropping. It freaks you out.
Yeah, I think some people in the stock market or in the crypto market have been feeling that same way the last few months.
Yeah, 100%, man. Yeah.
Just what you thought you had, just gone. Yeah. Okay. And so that you said several things in there. I want to try to pull them out for the listener, but number one, you got creative. You found a deal that made sense. Even in a down market, you didn't stop. You hadn't rolled over. You hadn't quit. You found a deal that just happened to make sense, and you did the work that maybe someone else wasn't willing to do to turn a profit. And then obviously the second thing that I heard you say, the major thing, was the debt snowball. It really just means that you were just really intentional about getting rid of some of those things so that the ratio was good so that you can start buying again, which is so funny because there's people freaking out right now about what to do, what not to do. And there's people saying, I'm not buying anymore. There's people saying that I'm trying to buy everything possible. And it seemed as if, like the story that you just told, you were just trying to get back to the place
I was trying to stabilize things. I mean, this is the financial market. And again, you got Warren Buffett coming out going, our financial system almost completely ground to a halt, and Lehman Brothers goes down, and Bear Stearns goes down, and Merrill Lynch is like this close to going down. That's scary, and you don't know what's happened. It's easy to look back now in retrospect, but it was a scary time.
Okay. So what was the bad decision along the way that you made that wasn't so hot?
Yeah, there's a lot of those.
Yeah, of course.
A lot of those. The biggest thing that jumps out to me is, again, this is 2005. And that's such a pivotal time because I just stepped away from my W-2 income. You want to make sure you're doing things right. You want to be making wise decisions.
Right.
And sometimes investors, property values, this is what a difference 4 years can make. Property values are shooting up. They're tearing through the roof. And anybody in real estate looks like an absolute genius in Florida in 2005. And so I bought some pre-construction condos. And if you're not familiar with what those are, that's where these were beachfront, luxury pre-construction condos, these big towers. Panama City Beach is relatively close to where I am, Destin, that area. Yeah. And so these developers, they have to pre-sell a certain number of condos in order to be able to get their financing for these $300 and $400 million towers that they're building. And what people are doing is you put like a 5% deposit down on a $300,000 condo. That's 15 grand. And property values are shooting up 20% a year. Wow. So if you got a $300,000 condo, it's going up 20%. That means in a year, it's going to be worth $360. You put a $15,000 deposit down, and then it's worth $360. You make 60 grand on your $15,000. That's a 400% return. Wow. And so I started buying pre-construction condos, and that works great as long as property values are going up. But when they come down, it has the opposite effect. Yeah. But once you get far enough into that too, you have to go from 5% to 20% down. And so we had several $100,000 sitting up there that literally just evaporated from those pre-construction condos.
Yeah. I think that there's obviously a pretty specific situation in real estate, but the principles here are universal in business. And that's what I love about even just the show, is being able to cross-reference. And so the decision, and tell me if I'm hearing slightly off, because obviously I'm trying to take a real estate example and make it applicable for all the listeners, but The investing into something that is only going up when it's going up, like you said, everybody's looking like a genius. You could equate that to a lot of things over the course of time, and maybe even crypto in today's world. I've made a lot of money in crypto, but there's a lot of people who've lost a lot of money in crypto. So I think that I'm trying to correlate that to these are the types of investments. It doesn't mean that you don't do them. It just means that you have to do them with a different lens. And when you take a big risk, like leaving your job, like you did, or for someone else who's maybe listening, they have their business that isn't 7 figures yet, and they really need to just press into their business and not be distracted. These are the types of investments, maybe like today, like crypto, where you just go, okay, here's some investment, here's some fun money, but I'm not planning on retiring on this. And would you maybe agree with that, or would you disagree? And just give me some thoughts around that.
I would agree. Yeah, 100%. Yeah, crypto is a great analogy. Wouldn't we all love to be in a time machine and go back to January of 2020 when Bitcoin ran up 900% and the altcoins ran up thousands of percent? Yeah, it'd be great to be able to do that, but you just don't know what's going to happen. And you're seeing that fall apart now.
Yeah.
You want to, I would say the takeaway there is be very careful if you own an asset and it goes up in value really fast.
Watch.
Just be careful. Yeah. And so for real estate right now, I feel like since 2012, this is probably the time where I feel like there could be a pullback or a downturn, especially as interest rates climb.
Sure.
Right now is a tough climate.
Yeah. So taking this back to building businesses, right now, you have a business around purchasing, selling assets. And so just because your commodity or your widget happens to be real estate, which has its own market, it's very similar to someone selling a service, a plumbing service, or a product like my franchises, Edible Arrangements. It's like there's a product being sold here. And so the business around the widget, though, is what you dial into. And that's what, through this good and bad decision that you've given us, that's what I've taken away for myself even, is you've played in this case, real estate game long enough, but really you've played the business game long enough to where you were able to weather the ups and downs of different markets. For you, your widget's real estate, but whether it's fruit baskets or whether it's a plumbing service or whether it's a business mastermind, whatever it is that I'm doing or that you're doing or that the listener's doing, that we have these moments in time where we understand that's not just about the widget always. It's about running the business behind it. And in the business behind it, there's pivoting moments, which you just gave 2 examples of. The things to do in the good time, the things to do in the bad time, maybe some good and bad decisions that you made along the way. But that's really what it is, that we're building a business around this widget. Yours just happens to be real estate. And so I love the perspective that you've given here over the course of the last 20 years, really is what you've given us.
Yeah, 100%. Oh, yeah.
Would you say, now that you've built this business over 20 years, let's just say, what do you know now over the course of 2 decades that you would impart to the new business owner who's listening? Or maybe they're not even new, but they're just not anywhere near where you are. Just that one quick thing, like the thing that you've gotten over 20 years that there's no way someone could have gotten in 2 years.
Yes. The biggest takeaway I could give with regards to that is I built things the wrong way in the early days. And that is, I would save up a down payment, go buy something. Save up a down payment, go buy something. And so I'd spend all my cash. And in doing that, if you're doing that model, probably 11 months out of the year, you can't buy anything because you don't have enough money.
Right. 100%. So, that's how I started too.
Yeah. You can solve that by partners. I would tell you to. Right. So the way to build real estate is by if you're young, hungry, go-getter, honest is critical, so critical to have high integrity in whatever you're doing, but especially in this. You find somebody who's got some cash, who's a little more comfortable and maybe doesn't want to grind 70 hours a week. And and it doesn't have to be with just real estate. That's whatever, opening an auto mechanic shop or a carpet cleaner or whatever. An Edible Arrangements franchise.
Yes, exactly.
And so I would encourage people to seek out high integrity partners.
Yeah, I love that.
Probably the biggest thing.
Yeah, it's a complementary factor of wherever you are, especially if you were talking to me at 22 and I knew I wanted to be a business owner and I was in the process of saving up for my first business. And if you had told me that there was people out there who had hundreds, if not millions, or hundreds of thousands, if not millions, that wanted to do deals, just put me in the right place. And I would have been a good bet back in the day. Now I bet on myself, but that would have been a good bet for somebody. So maybe somebody who's listening now, that's how they're going to grow their company, is they need to go either, like you said, maybe raise the money or find a partner who's got the money who can take you to the next level. Regarding just good decisions, bad decisions, this topic that we've been on, do you take certain decisions through any process or any discipline nowadays to try to repeat good decisions?
We have our financial models that we use when we underwrite properties, and mostly what I do are apartment complexes now.
Yeah.
And we've tightened those up as interest rates have climbed.
Sure.
What you don't want to be is static. You want to be aware of what's happening. And properties, I would not buy properties right now that I would have bought probably 4 or 5 months ago. Yeah. So it's very important to just be aware of what's happening there so that you can make the best decision.
Yeah.
As you're trying to invest, those are hard-earned dollars. So
100%. Yeah. Valuing what it is that you're trying to put into play helps you make a good decision, not be flippant about it. Okay, Charlie, you ready for the speed round? We're going to go into some of these one-word answers. I'm notorious for asking for more of those. So
one word. All right, man.
We'll see if it's possible. But the first question
Does it have to be one word, really?
No, not really. But if you've been pretty short on your answers so far, so I don't think you're gonna have any troubles, but I might dig out some more. Don't worry.
Okay.
The first question is this: if you could only pick one metric in the entire business, all 4 of your models, what would the one metric be that you would track forever and ever?
Equity.
It's great real estate answer. Tell me what that means to the business, or why would you track that?
That is one of, probably, I would say it probably is the best determinant of the success of a company. If you own an investment company, your equity should systematically increase over time as hopefully you're improving properties, simultaneously paying down debt. Yeah.
Okay.
It should be equity. Yeah.
I love it. What book would you recommend that a 6-figure business owner read who's trying to scale to the 7-figure mark?
That depends so much on the person.
Okay.
I can tell you for me, this book that no one's heard of, it's called Success, the Glenn Bland Method by Glenn Bland. Okay. And my best friend's grandmother gave it to me when I was 19 years old in college. Wow. And it was a book on how to effectively set and achieve goals.
Okay.
So just a book on goal setting. Most people drift through, and I know you said one word answer, and
no, please, this is
killing
good. You should continue.
Yeah. Life has a starting point and it has a destination.
That's right.
Most people don't realize that. And so if your goal is to drive around in circles, that's fine if that's what you want to do. But I think so many people do that, not realizing that's what they're doing. And so a goal just gives you a clearly defined destination. There's a whole process that he has for achieving goals, but I'm huge on, that's one of the things that we do here in our business is that if you're a partner, we share goals. I hold you accountable. And the secret sauce is that you will progressively work towards achieving those goals. Yeah.
I love that. You're 100% right. If the destination isn't clear or floating merely.
Yeah, 100%.
Okay. If you only had 1 hour, Charlie, to work on your business every week, what would you do inside of that 1 hour to make sure that you were successfully running it like you do now?
I would figure out how to delegate.
Okay.
Prioritize and delegate.
Okay. Give us some specifics. What would you do inside that 1 hour?
I would try and identify everything that needed to be done over the course of that week. And I would try and figure out if I was the only person who could do it or if someone else could in fact do it. And if someone else could in fact do it, I would work towards assigning as much of that stuff to someone else as I could.
Sure. Okay. And last question. Are you ready?
I'm ready.
If you lost it all, what would you do?
I would get up and go to work in the morning, which again, there's just that's how I'm wired. You want to make sure I would go back to a W-2 job because I want to make sure my family's taken care of and the people are eating and the electric bill gets paid. And then I would take as much of my income as I could and work that towards creating passive income. And most importantly, as I would try and find someone that I would want to be and figure out how to add value to that person.
There you go. Yep. Yeah, there's a huge opportunity there with value. Charlie, that's great. I appreciate the answer. How can someone connect with you? They want to maybe do a deal with you. They want to learn from you. They want to just get to know you better. How can they find you?
Our website is alliancecapitalpartners.net. If you Google Alliance Capital Partners on Facebook, you'll find me in there as well. So yeah, just look for this beautiful face and that's it.
That's awesome. That's awesome. Charlie, we appreciate your time. You've been super valuable. Thank you for giving us multiple decades of history, experience, value, and wisdom, man. We really appreciate it. We wish you nothing but success.
Chaz, thank you, man. This was fun. I enjoyed it.
Yeah, buddy. Thank you for listening to Gathering the Kings today. I hope that you were able to pull out a few nuggets to go apply into your business right away. More importantly, though, I hope that you're realizing that it takes more to be successful than just being by yourself, doing it all on your own, carrying the weight all by yourself. What I have realized, not only in my own journey from multiple businesses and multiple different industries, and now interviewing literally over 200 or 300 other very successful 7, 8, and 9-figure business owners, is that it's tough to do it alone. And so Gathering the Kings literally exists to bring together successful entrepreneurs. In fact, we are putting together 1,000 kings, specifically who are grateful but not done. We're intentionally assembling kings who fight tooth and nail for their business, family, and communities. And here's what we believe, that in the pursuit of excellence in those areas, that it ignites within us the responsibility to govern power and forge a lasting legacy. So if that relates and resonates with you, and you know that you need people around you, sharp, qualified, other very successful business owners, I want you to go to gatheringthekings.com. I want you to take a look at what we're doing and see if it makes sense for you to be part of our pursuit to 1,000 kings. Talk soon.